Dr. Uche Olowu there giving insights into the banking system, payment system, the economy, forex, a lot of issues surrounding the financial system. Well, let's move straight to the stock exchange where Effiong Ekop is already standing by to bring us up to speed with trading activities. Take it away, Ekop.
So good afternoon. The market closed in the negative territory, just as we said during 1 hour period in the afternoon. There were negative indicators, and they closed exactly that way. Index was down 0.6%, 0.60% down. Then the biggest losers included USC Property, 10%, Beja Paint, 9%, Len Africa, 9%, Air Services, and Owando. More than 30 companies were price losers at today's transaction. Let's turn to Mr. Lukman Otunuga, who is a research analyst at FXTM broker. He is my guest on this platform. You are welcome.
Thank you for having me here today.
You play in the larger economy and even at the international level. So let me start by asking you that you know that Nigeria is approaching general election in the next 6 months. What kind of economy do you foresee, for the country in the light of this?
So before we take a look at what to expect from Nigeria's economy for the rest of the year, I think it's very important we take a bird's eye view of Nigeria as of now. GDP growth in the first quarter was 1.95%. Inflation continues to ease. The Naira has witnessed stability. Foreign exchange reserves remain robust and oil prices are supported. So based on these factors alone, one would think the outlook is encouraging. But I think it must be kept in mind that Nigeria still remains threatened by domestic and external risks. Domestically, we know that with the election coming soon, uncertainty could prevail, and uncertainty may impact growth. Externally, the Federal Reserve is expected to raise US interest rates 2 more times this year. When you add this with global trade tensions, weighing on sentiment and sparking risk aversion, emerging markets such as Nigeria could feel the heat. So to answer your questions, Nigeria's outlook this year could depend on how these key factors play out.
Okay. On the inflation side, we have seen something that looks like credible management in the sense that month after month, the indicators are looking downward. But, food prices and other general goods, appear not to be taking the same direction. What do you talk about the standard of living marrying with what we have in inflation data?
So looking at today's inflation data, we saw inflation hit 11.14%. So this continues to suggest that in Nigeria, inflationary pressures are slowly becoming a theme of the past. Now, if inflation continues to moderate, this could benefit the man on the streets. With inflation declining, there'll be more nairas, the purchasing power will increase, and we know that consumption is a function of economic growth. So if the Nigerians are spending, this could actually positively impact the Nigerian economy.
For about a year now, the Central Bank of Nigeria and the Bankers Committee, they have maintained monetary policy rates at 14%. The last 2 meetings, some analysts were asking for downward review, and we did not see that. What's your opinion about keeping it at that level?
Well, this is very interesting as to cut or not to cut. This has been a widespread question when it comes to the CBN monetary policy. Well, initially, with inflationary pressures easing and potentially hitting single digits, market expectations were growing that the CBN would move forward with taking the action by cutting rates to 12%. However, there's a lot of factors that could cause the CBN to remain status quo. Firstly, we know the presidential elections are coming close in February 2019. So we could see a cost-push inflation scenario which boosts consumer prices. At the same time, there's been reports that the government may actually lift the national minimum wage. So all this could actually cause inflation to rebound. Now, when we look externally, as we said earlier, the Federal Reserve is expected to raise US interest rates 2 more times this year. So if the Fed is raising rates and the Central Bank of Nigeria cuts rates, this could actually widen the monetary policy divergence between both major central banks, ultimately accelerating capital outflows. And this is not what Nigeria needs right now. So
my last question now, what's your take on the projection of GDP in the second half of this year, and what do you think should be the key drivers of the economy from now on?
So as we know, Nigeria continues its quest to diversify away from oil reliance. But as of now, the truth be told, that Nigeria's fortune still remains tied to oil. So my expectations of GDP, if everything stays the same, GDP could mimic first quarter at 1.9, 1.95%.
Many thanks. Let's leave it there. We do not have much time.
Thank you.
Mr. Lukman Otunuga, a research fellow at FXTM Broker. He's been my guest on Market Close this Wednesday when we had negative transactions and more than 30 companies, taking baskets of losses from the trading house. Back to you, Tony.